Hi, thanks for tuning in today. I'm Ben Nye, analyst for Tusk Media, and today we're talking about Bombardier, the Canadian plane and train maker, and the deal that they just signed with Airbus that is expected to be completed in the second half of 2018. Now, this deal only takes place with respect to the CSeries aircraft. CSeries aircraft is bet the company idea from Bombardier that was initiated back in the 2014-2015 time period. And this is designed for the 100 to 150 passenger set. So in the narrow body, which is expected to see the biggest growth out of any type of aircraft right now. And so Bombardier has really sunk a ton of money into this. They were already on the verge of going bankrupt in 2015. They had to be bailed out by the Canadian government on a couple of occasions. And now they're essentially betting the company on this new aircraft, the CSeries. They are now at a point in the end of 2017 where they're just wanting to get scale on this. The Trump administration comes out and levies these enormous taxes that you've probably seen on the news, and we actually did a video on this a couple weeks ago. So the Trump administration comes out with these big taxes, and Bombardier, which has sold all these planes to Delta, says now, well, what are we going to do? How are we going to be able to handle this? How are we going to achieve scale? Because when you have a new aircraft program, whether you're Boeing, whether you're Airbus, or whether you're Bombardier, you need to achieve scale, and you need to achieve scale quickly. There's a whole difference in your fixed cost leverage if you're dealing with building 10 planes a month versus building 5 planes a month. So it's more than just the revenue, it's also on the margin side. So Bombardier is now in a position where companies don't really want to buy their aircraft because they don't know if it's going to cost $80 million or $20 million. So Bombardier is stuck between a rock and a hard place, and it's frustrating for them because they have a new management team, and they're finally getting to the end point here on this C-Series program just when the Trump administration comes out and levies these big fines, essentially, these tariffs. So Bombardier now goes to Airbus and says, hey, Boeing is on our backs. The Trump administration is on our backs. Let's do something together. Airbus was rumored to be in talks with Bombardier back in 2015. Airbus says, well, now the time is right. Plus, we can stick it to Boeing. And so they do this deal. Now, Airbus seems to be getting a really sweet deal on it. So let's go through some of the specifics. Airbus actually gets a controlling stake in this C-Series partnership. So they'll have about a 50% stake, and they'll actually have a majority of the voting shares. It leaves Bombardier with a 31% stake, and Investment Quebec, which is that bailout fund, essentially, with a 19% stake. So Airbus has the majority now, or at least a plurality, but they also have the majority of the ownership of this aircraft and the program. Bombardier is required to get the program to break even by 2020. This is going to require another about $700 million of capital after 2017. And after that, Bombardier needs to cover the first $700 million of losses if they can't get to break even before 2020. So in return for this, Bombardier will get additional shares in the partnership if they have to pay this $700 million. Bombardier doesn't think they want to. This is more security just for Airbus to say, well, we don't want Bombardier just leaning on us paying 50% of the cost for all of this. Airbus will receive 100 million warrants at a price of $2.29 in Canada. Currently, that would be about 5% dilution because there's about 1.9 billion shares outstanding. And the stock trades, it's actually having a great day today, but it's trading north of $2.50 Canadian. So those warrants are in the money. In addition, Airbus has call rights on it, so they can actually buy out Bombardier's stake in the C-Series aircraft at a fair value. And this was not explained in either the Airbus conference call or the Bombardier conference call from last night. In addition, Bombardier has the right to put its shares in the partnership to Airbus at fair value. using that same calculation. Partnership's not going to have any debt at closing, so it's not like Bombardier can load up the partnership with debt and essentially have Airbus providing the backing for that. Bombardier is still going to have a big debt problems of its own, but at least now they have some way to monetize this CSeries. Like they can put those shares back to Airbus. Again, expected close in the second half of 2018. So you look at all of this, there's no upfront money changing hands, and all of a sudden, all this work that Bombardier has done, all this money they sunk over $1 billion into it, is now just being given away essentially to Airbus for a 50% stake. So what is Bombardier getting it out of it? You would only give something away if it's expected to cost you money in the future. It's like if you have a very bad old car that's just sitting in the driveway and you can't move it, and so you actually give it away to someone and then just say, if you can take it off my hands, it's yours. That's essentially what it seemed like Bombardier did. But Bombardier is getting some things for it. So, for example, they do get scale. They can plug into Airbus's operations, which should help them work down the cost curve and increase the margin on these jets. They also get the supply chain expertise. They have a lot more leverage with suppliers this way. Again, that helps margins. And also there's confidence for customers. On Airbus's conference call, they said, quote, "There's plenty of customers out there who are convinced that CSeries is a great aircraft, but they've been hesitant to engage and to buy this aircraft simply because they were not sure about the future of the program and about the future of the shareholders in the program," pointing to Bombardier's questionable credit situation. Again, this is a company that has been flirting with bankruptcy for the last 5-10 years. And then finally, and probably most significantly, is that they will be able to have final assembly at Airbus's facility in Mobile, Alabama. This is really important because it means that you don't have any import tariffs on the planes now because you're doing final assembly in Mobile. So if you are selling to Delta or American or United or any other American carrier, you can now sell it without paying the 300% tariff or the 250% tariff or whatever tariff the Trump administration has woken up in the morning feeling like levying on a Canadian company. So that's a big reason for the deal, and Boeing actually came out with a statement saying that it's questionable the motives behind the deal. I mean, give me a break. Like Boeing didn't even bid on this Delta contract. We've talked about it ad nauseum, but Boeing is really just whining and complaining about this right now. So what does this mean for Bombardier? Well, I think that it actually breathes some life into the stock in the short term. Whether this is actually a game changer, it's difficult to say because, again, it's not helping with the current debt situation at Bombardier. They're still going to have to put more money into it. And there's still question marks about the economics that they're actually going to realize from the CSeries plan when and if it monetizes. That said, they now have the option to put the shares back. So this is about, my guess is it's about worth $1.5 billion. So 30% stake is worth about $1.5 billion right now. Bombardier feels like it has increased the value of the program from $2 to $4 billion over the last 2 years, which was the last time it was valued. Last time it was valued was at $2 billion in 2015 when Investment Quebec put that $1 billion injection in. And Bombardier thinks they've doubled the value of the program since then, which should be the case because they have sunk a ton of money into it, over $1 billion since that time. So going forward, Bombardier is still a very volatile stock. It's still an extremely uncertain future for the company. But there are signs of life. Management does not want this company to fail. The Canadian government doesn't want this company to fail. And now Airbus doesn't want this company to fail either. So they're getting more people on board. Catch you next time.
Tusk Media is a subsidiary of Narwhal Capital Management. Ratings and reviews of Tusk Media content are not to be construed as endorsements of opinions, analysis, or services offered by Tusk or its parent company. The opinions and predictions shared here are our professional beliefs at the time of publication. We are not under duress from any of the corporate entities mentioned. This is not a solicitation to take any particular action. Although we are investment advisors, this information should not be considered investment, legal, or tax advice. We strive to be as impartial, insightful, and accurate as possible. We base our opinions, analysis, and calculations on information we believe to be reliable, but we cannot guarantee its accuracy. We can, however, guarantee that our opinions will sometimes be flat out wrong due to a variety of factors. Employees and clients of Narwhal Capital Management may or may not hold positions in the securities detailed and may or may not hold these positions in the future. A full list of all securities purchased, sold, or held during the 12 months preceding the date of this publication can be provided upon request. Unless otherwise noted, all data accessed via MarketWatch or the Bloomberg terminal. Past performance does not guarantee future results. A copy of Narwhal's Form ADV is available at the SEC's website, www.advisorinfo.sec.gov, or from Narwhal upon written request.